All right, everyone, welcome back to Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiots. I told you we have an excellent season kicking off 2020, and I am joined today by none other than the co-founder and CEO of Circle, Jeremy Allaire. Fun fact about Jeremy and his team, I believe I was one of the earliest applicants to Circle, and this was back in late 2013. Had actually got an introduction through one of their board members, and as fate would have it, a gentleman by the name of Anders that I was considering starting a stablecoin project with way back in 2013, 2014, interviewed around the same time as I did. And basically we came in around the same time, and I told him, well, they're going to make you an offer on the spot. He said, no, it's just an informational thing. And sure enough, you guys made an offer. Anders left me. And he recently
You still blame me for that. Oh, he joined Masari.
Yeah, he recently joined Masari. And you are now focused on stablecoins pretty much exclusively. So the intersection there over the course of the last 6 years, and of course there's been some work in between my involvement with DCG and some of the work we did while I was at CoinDesk. It's been fascinating to watch Circle's evolution over time, and I think that you're in a very good position right now on the USDC front, which we're going to talk quite a bit about, as it is emerging as one of the leading contenders for what's going to be a dominant stablecoin, especially in the U.S. dollar-pegged stablecoin market. So we're going to cover a lot of territory right now over the course of the next hour. But Jeremy, for starters, I'd love to get the quick background on you. I think many people in the industry know a little bit about your background previous to digital currency, but let's talk about that just to start, and then the evolution of Circle kind of in your own eyes, and then I'll maybe jump in with a little bit of my thesis as to kind of where Circle goes from here, and then we can kind of bat that around, and you can tell me how far off I am, since I'm very often wrong.
That sounds fun,
but never in doubt.
You were a good I think a very sharp early speculator about what we were going to be doing when we were stealth back in 2013 and early 2014.
Right. Yeah, that's how we got in touch.
Yeah, and I think you even knew some of the internal code names we had for different things, which sort of talked aspirationally about where we saw digital currency going, and and we'll get to all that conversation in terms of kind of where things are today. But my background, just for people who aren't aware, I've been working in internet platforms for a long time, since the early 1990s, I had a background in kind of studying political economy, global political economy, and that's what actually drew me into the internet in 1990, became kind of very, very obsessed about what you could do with it, and worked on multiple companies over the next 15, 20 years. I think what animated those companies was excitement about the promise of open platforms, open networks, permissionless access to open protocols, what you could do with that, with information, communication, software delivery, media, all these kinds of things, which were, I think, critical kind of infrastructures that kind of built up on the layers of the internet from the early 90s through obviously still today. And so, first business was really enabling programmers to build software applications through web browsers, which was quite novel in 1994, 1995, but really empowering a new generation of developers to create software for a new kind of model. And to build kind of content applications, as we'd like to call them back then. And that grew into a public company, and then eventually we merged with Macromedia, one of the dominant internet design and development tools companies, and I was chief technology officer there, and worked on Flash platform back in, this would have been in 2001, 2002, 2003, at that time, Flash was the most ubiquitous piece of software on the internet. 98% of computers had it, and we could actually upgrade the runtime of the internet in 12 months, because we could basically launch a new version of the player. It was like a new, almost like an operating system. It had a virtual machine. we were advancing the programming language to do a lot more stuff. And we had a set of ideas that when you had broadband and Wi-Fi kind of lighting up, which were just sort of happening then, that the kind of user experience of the internet could be a lot more rich. And we put underlying like primitives into that platform for video. And that, sort of sparked my next like major passion, which was, in early 2002, sort of interested in, how could you disrupt what is television and media distribution, not just like newspapers coming online or print magazines coming online, but actually television on the internet. And so I started another company, left Macromedia, started another company called Brightcove, which is a listed public company now, which I took public a little bit before actually starting Circle. And that was, again, a platform company. So basically providing platforms for companies and developers that wanted to, use video and do video distribution, not just to browsers, but to mobile devices, TV sets, all this stuff, and bypass the legacy system for media distribution, kind of going over the top, which is the phrase that we used with software and media and communications in those generations of the internet. Now, I sort of think about things like stablecoins as like we're doing an over-the-top financial system by building it all on open permissionless networks, open networks, protocols, building platforms developers can build on, and really trying to create a user experience around money that's really different. But that's sort of a little bit of the thread that runs through it. And I think in 2012, had just taken Brightcove public, and like a lot of people around 2012, became interested in and then obsessed with cryptocurrency, not just Bitcoin specifically, but the broader kind of arc that we could see back in early 2013 when Sean and I were batting around starting Circle, many of the ideas that sort of animated the founding of the company, things that we imagined becoming possible, are actually just now becoming possible. And so it's a super exciting time in the industry. It's a super exciting time, I think, also for Circle, but it's a very exciting time for the industry where, many of the things that got us to found the company and belief systems about what could happen with the global financial system, you could actually start to see some of those emerging. So that's a little bit of my background and a little bit on how I got to Circle.
Great. So we glossed over quite a bit of meat in the middle, right, in terms of kind of where Circle started and kind of where you've been the last few years. And when people see the focus today on USDC, and Circle Pay is still integral to the app, correct?
Yes. So Circle Pay, we ended service on Circle Pay last year as a standalone service. So, and I can talk through the kind of
which one am I thinking of? So the current product suite includes USDC and
yeah. So right now we have the USDC service, which is available to individuals and institutions and businesses, and then we have a whole new set of products that we're gearing up to launch very soon.
Great.
So that are all built around USDC
okay,
and stablecoins. Yeah.
So obviously you sold Poloniex, you sold the OTC business, and that was my misunderstanding on Circle Pay. But the reason I thought that it might still be integrated was because you were one of the earlier companies to think about digital dollars moving back and forth using Bitcoin, right? So there was a buy-sell functionality early on with the Circle wallet and trading experience.
Sure.
That looked a lot like Coinbase in terms of its simple buy-sell functionality, ability to buy with credit cards. But there was a Venmo-like quality to a lot of what you built subsequently,
sure,
using crypto assets. And what was interesting was you had completely abstracted away the fact that Bitcoin or any cryptocurrency being used, which in my eyes is kind of a precursor. If you had a digital dollar, if you had a tokenized stable coin, then that would be the actual asset that you allowed people to see in their accounts and actually transact with. So we've kind of gotten to that point now, but you've gotten out of the direct to consumer phase, I guess, with Circle Pay.
Yeah. So
talk about the backbone now that.
Yeah, I think just for context, and this is it's that you're right on in a lot of this. I think the context is so when we started the company in 2013, there were sort of several fundamental premises that we had and beliefs that we had. And, one of those was that, public blockchains would be effectively like emerge as like a new infrastructure layer for certainly for financial applications. There's sort of a broader set of idea around like fiduciary trust applications that could span not just pure finance, but fundamentally like public chains could be a new public infrastructure layer on the internet for financial applications. And at the time, there were certainly multiple blockchain projects, but Bitcoin, really dominated. And in early 2013, what brought me into the space was not just sort of where Bitcoin was then, but there were a lot of really interesting projects that were going on to think about, okay, where could you go with this public infrastructure? How could you issue assets on top of it? So you wouldn't just have like the native token of Bitcoin, you'd have, issued assets. People remember like colored coins were early proposals, and, things like Counterparty. There were a lot of really interesting projects, but the technical community was very interested in that. Like, okay, if we have this kind of trustless transaction layer and ledger, and it's highly secure, like what happens when you can layer other things on top of it? So that was one thing we basically said, okay, that's going to happen. I don't know exactly which way that will happen, but we actually hoped it would happen on Bitcoin, and it did not. And maybe it eventually will. But, and the other was, there was all of this talk about how do you expand from like the very basic script that you could use for things like multi-sig transactions or very simple kind of script with Bitcoin, and actually kind of blow that out so you could actually have a fuller virtual machine, and you could actually write code, AKA smart contracts, that could not just, interact with these issued assets, but actually could allow you to codify economic relationships in code, literally, and have that running on this public infrastructure. And those two ideas were what got us really excited, that, if those things happened and it got to an infrastructure where you could, scale it to like the same scale we use, say, HTTP or SMTP or other protocols on the internet, that would be the building blocks that would allow you to have the building blocks to actually recreate the financial system in the image of the internet. And that's why we were so excited. And the circle, like, very early on, we didn't put bit or coin in our name. And we were very conscious about that because we wanted to, build a company that might outlive Bitcoin. It wasn't necessarily about the coin or whatnot. And the other was, and actually the very first blog post we ever did when we kind of debuted the company in the fall of 2013, we talked a lot about global digital currency, about the promise of value moving the same way that, text messages and content and data move on the internet. And what we aspired to do was create a user experience that used public blockchains. Bitcoin was the only like reasonable public blockchain to build on at the time, but which abstracted that away and allowed you to essentially instantly move between dollars, euros, pounds, and instantly kind of move in and out of Bitcoin as like a transaction settlement layer. So you could have open interoperable transactions across digital wallets and seamlessly move between currencies. Now that was what we built with CirclePay. So CirclePay actually was designed so that you had dollars or other currencies and you could send your dollars to any Bitcoin address. And the hope was that there would be more and more digital wallets constructed similarly to the way Circle was built, so that you'd have this open pipe that moved between kind of, what we thought of as like proprietary closed systems like individual currencies, and have this kind of open infrastructure to do it. So that was sort of how we envisioned things and what we initially built with that set of ideas.
But before you shut down the CirclePay product, had you transitioned to another tech stack? Did you use Ethereum, or were you continuing to go with Bitcoin? Because there's a bit of history here where every single time that I speak with an executive, whether it's you or Bill Barheit or Eric Voorhees, that lived through the hard fork war, right?
Sure.
2017, where fees spiked, and there was a lot of uncertainty as to how the network split was going to ultimately resolve itself. That you can feel the scar tissue almost, right?
Sure.
Because so many of the payment companies, their business models were absolutely impacted with the rise in fees. What was your reaction to that? Not at a philosophical level, but just from a practical business level, in terms of managing that treasury back end to maintain the abstraction of this.
It was interesting. I mean, so, the way that our system, was built, and that actually kind of lives on as a platform infrastructure, which we're now going to be releasing other products for other people to use. But the way that infrastructure was designed was that you could kind of, instantly move between these different currencies and through Bitcoin. And so we actually had to build like an instant liquidity engine to do that. And we were actually quite good at that. And that was actually a source of income for us. And that actually, that liquidity engine and the automation and the tooling and then the humans that ran it, that actually became our second product, which was Circle Trade. So the essentially what was like a proprietary treasury and liquidity system for our payment network system became a separate, B2B product, essentially an institutional trading product. But it's a bit of a tangent. But I think the really important thing is, so when you go back to that time period, the use of Bitcoin as like a public settlement network was not viable, right? So, and we were outspoken about that. And I used to like get hate mail about making comments about that fact, that Bitcoin wasn't going to scale, that it wasn't going to be useful for payments, that like many of the things that when in 2013, when we started building this, we thought would happen on Bitcoin, it just didn't happen. And we could talk about why, or ideological or philosophical kind of things, and those are very real. And I think there's integrity to all of that in terms of where things have gone for Bitcoin, preserving its position as a sort of non-sovereign store of value, which is, I think, a very compelling, defensible, and important position. But from our perspective, we were interested in what people now call like open finance or DeFi. We were interested in like, okay, I want to tokenize dollars. I want smart contracts for financial interactions. I want to like build a system that will connect to mainstream users so that people everywhere can get the benefit, not just of saying, hey, we're moving to this non-sovereign monetary system, which is this, kind of alternative universe, but actually like take central bank money and make it more useful on public blockchains and get the benefits of, true digital assets for things like fiat, but have the openness and interoperability of an internet model. So that was what we were interested in. And in late 2016, we made a decision to move technically away from Bitcoin. And we announced a project back then called codenamed Spark. And there's a blog post, you can go read about it. And the Spark project was basically our commitment to rewrite the infrastructure for how fiat tokens would work, and that we were going to do that on top of Ethereum, and that was going to be an open source project. Spark became USDC. So we basically, starting in 2017, began work on essentially recreating that layer, because Ethereum had gotten to a place where things like tokens and smart contracts were in production. They worked. There were lots of issues with Ethereum then, and there still are issues with Ethereum, but basically we could see like as a project, as an infrastructure, like it was vectoring in a way where we could actually take these ideas and actually implement them, and do that in production and do that on the open internet. And that was really exciting. So we began that work. And then obviously that launched in 2018, but that was a pretty important kind of moment in time where we started that shift. And then when we introduced USDC, I think we kind of announced it in May at Consensus. I think you were very involved at the time, but in May of 2018, our decision then was not to couple it just to our own payment system, but actually, launch it as a consortium, launch it as an open standard, launch it in a way where anyone could utilize it. The tokenization was sort of open to all, and really try and build out an open ecosystem around it. And obviously, we announced what we were doing, and then when it officially launched into general availability, Coinbase was on board as part of a co-founding member of the Center Consortium, and that was just over a year ago or so. So that's sort of how that emerged.
So in 14 months, USDC is up to about 450 million in circulating supply. And that's real circulating supply, right? Unlike the ephemeral, market caps that you'll see going down the coin ranking list, this is liquid dollars that have been infused into the system that are in a deposit taking bank. You've been outspoken about Tether. Many people have been. I'm curious, how you view the evolution of the stablecoin market, because there's really 4 different types of stablecoins, maybe 5, right? There's Tether, which is like the Wild West coin that is going to play the shell game and arguably be a truly permissionless, unseizable store of value that's pegged to the dollar. And because it's become so systemically important in some overseas exchanges especially, you can see in some respects why it's held its peg, even with all the surrounding controversy and uncertainty and the issues with the underlying banking infrastructure. Then there's DAI, right, which is managed by this algorithmic central bank, if you will. There's programmatic assets. The most high-profile one, Basis, was shut down, but there still are a couple of other ideas for how you might be able to create what's called a seigniorage shares model, where some of the early backers become the stopgaps. You've got CBDCs, which I know we're going to talk a bit more about, and maybe the majority of the back half of the conversation, where like the Chinese yuan, the Bank of Thailand, the ECB. There's a bunch of these going on, and then there's USDC, and maybe I'd put, and you can explain why I'm wrong if this is the case, but I put Gemini dollars, Paxos, and USDC kind of in the same general bucket of that last tier of assets, which is you have a regulated entity that has good banking relationships, that is really in the weeds on the regulatory compliance fronts, and working with only the top tier exchanges that have pretty strong KYC, AML checks and balances. The question there is always, to me, is that going to be an inter-exchange settlement coin, or will it be able to proliferate in all of these other applications that you had hinted at in terms of your interest in DeFi? Because there is a regulatable element to it, because you're talking about securing assets that are part of the existing financial system, tokenizing those assets. I wonder where the primary use case is going to be for the time being, because it's not as permissionless as, say, DAI, but it's also probably a hell of a lot more reliable if you're using it the way stablecoins have been used to date, which is primarily for liquidity between these different institutions. Is that a good framework for thinking about this market, or how would you slice and dice those different?
Yeah, I mean, I think it's a fine framework. I think I don't want to sort of opine on the pluses minuses of each of those, but maybe frame out a little bit of how we look at things. I guess the first piece is there is obviously like a need for permissionless, censorship-resistant type of monetary instruments, and Bitcoin is clearly like the best one out there today for a host of reasons. I mean, there are others that are interesting from a privacy and security perspective that maybe have some advantages over Bitcoin on that, but just like generally speaking, that's a pretty strong one. Obviously, having a stable value, permissionless, censorship-resistant digital currency is also really interesting for a host of reasons, and I think projects like Maker are really interesting from that perspective. I would challenge the notion that Tether is censorship resistant or permissionless, because it's a corporation, and it is a corporation that is subject to law and jurisdictions and jurisdictional reach. And this space global stablecoins is deeply on the radar of every major government. And I think that's a good thing. Like, I don't think like that's a bad, I think that's fantastic news, because I think the benefits of digital currency, of taking central bank money and rendering it as digital currency, but ideally rendering it as digital currency in a way in which that digital currency unit is fungible, is interoperable, and can run on public networks. That's really profound. That's why we started Circle, was a belief that that would happen. And from our perspective, what's most important is that you have standards. And this is that gets to a really, really key set of differentiation when we look at what's out there. You know, the internet is built on standards. It's built on interoperable standards. The fact that we can access all of the world's knowledge, you know, so seamlessly is because we have a standard called HTTP and HTML that no one controls. It's you know, there's a governance process around the standard. Lots of different companies in the industry implement it. There's lots of different implementations of the protocols that support it, but that open network of information exchange is so powerful. And we have that in a lot of other spheres on the internet as well. And if we want an internet of value exchange, or you know, you want the benefits of the internet for the financial system, ideally you'd have, you know, standards and interoperability schemes that are open and that everyone can implement, and that don't create, you know, fragmentation, but actually, you know, drive the network effects that come from it. And so a first principle for us is a belief that stablecoins have to be governed by consortiums, and that there have to be ultimately many members that are both kind of minting members of those consortiums. And then there can be many other types of members that are in different kinds of distribution roles, and that those firms are conducting a regulated activity, and they have to do that in compliance with the law. The laws need to be updated. Like I think we need ultimately new laws to deal with this new phenomenon, right? And that's coming, right? So
yeah, dollar pegged stablecoin should probably not be regulated like securities.
Definitely not like securities, but I mean, I think, you know, this gets into this.
Well, I mean, this is under discussion in the U.S.
Yeah, no, I'm very aware. Although the most recent drafts of that legislation provided a carve out for things like U.S. dollar coin, very specifically to say if it's fully reserved and backed by dollars, it's made available in this way, it's not a security, and that's pretty critical. But I think,
which is a shot across the bow for Libra. But good for any dollar denominated or single.
Sure. I mean, I call that a nuisance bill, not like a bill that actually has a chance of becoming law. But I think it's sort of make a point kind of thing in a committee. And we'll see. These things are very real. But I guess like the like meta point here is, and I talk at length about this in this white paper that we've just published as well. But the meta point here is that, you know, reserve currencies from, you know, let's just call it the G20 countries, like they're not going anywhere. The international monetary system and all of the trade and commerce that happens through it is enormous. It's incredible. And I think what we're interested in is, you know, how do we deepen the integration of these world economies? And how do we use all the lessons that we've learned from the internet to transform media, communications, software, retail, transportation, other things? How do we apply those to the financial system? And, you know, the reserve banks, these central banks, are critical to that, right? They're not just going to roll over and say, I'm just going to let a bunch of private companies just run off and do a whole bunch of, you know, balkanized, you know, or you know, tons and tons of these different, you know, digital currency tokens for their currencies. They're going to come up with rules. And if you look at the way the financial system is regulated, there's sort of the kind of custodians, there's the risk takers, and then there's kind of market infrastructure, which is quasi-regulated. But the market infrastructure, you know, it's sometimes self-regulated, like exchanges are sort of self-regulatory frameworks. Even the securities industry itself is sort of self-regulated. But also market infrastructure like Visa, that emerged as a nonprofit association of commercial financial institutions who said, we need to have interoperability. Like if we all have different cards with different schemes, like then no one can pay anybody and we don't get network effects. And so why would we want to do that? So they said, okay, let's agree to a standard. Let's create a nonprofit association, which we can be members of. And, you know, at the time, like central banks weren't really in like let's just call it like retail electronic money. That was the birth of retail electronic money. And that was really important. The central banks didn't say, well, we have to run all the infrastructure for retail electronic money. They said, okay, if you can come up with a self-regulatory scheme and a set of technical standards and everyone agrees to those, and we as central banks say, okay, that looks like it's safe and sound and the issuing institutions that sit underneath it are following our safety and soundness requirements, then that electronic money system is legitimate. We're gonna let it run. SWIFT is sort of the same thing as well. It's a nonprofit association. It's a technical set of standards. These associations and standards are actually how the electronic financial system works today. And so what we're basically saying is we need the same kind of consortium models that have public-private partnerships that work where governments, including central banks, work with private sector actors to come up with the supervisory frameworks for how this should work. And there shouldn't be 50 different private companies issuing 50 different US dollar stablecoins. There should be a US dollar coin, and it should be a standard, and it should ultimately have a rule set that is reasonable within the context of the way the monetary system works. The thing from our perspective, though, is you know, each of these things pushes the possibilities of money forward in new ways. Like the retail electronic money pushed the possibilities of commerce forward in really powerful ways. I think in the case of stable coins, it's much more transformative. It's much, much deeper because you're talking about a digitalization of fiat basically means that your central bank money, no matter what currency it is, no matter what central bank it is, exists everywhere that the internet exists because it's internet money. It exists everywhere an IP address can be reached, including intergalactically. Like it has this instant global planetary reach. And if it's running on a public network, it has all these incredible attributes for the benefits of commercial integration. And, you know, and I think, you know, from my perspective, we've said for a very long time, we've sort of said, you know, payments will just become a free service on the internet in the same way that communications and information sharing have become free services, because ultimately when you get to a public infrastructure where you can tokenize and have this kind of digital currency, like the cost of moving it around will be essentially the cost of moving data. It will move towards zero. The really interesting opportunity is when you have programmable money, and now what can you do with that frictionless value movement, and how can you automate interesting economic arrangements between parties on the internet? That's actually why this is so different than, say, the retail electronic money chains that you saw with things like Visa.
Yeah, and look, I think you can envision future applications that leverage this and make use of the enhanced speed and the cross-border functionality and you know, all the different tools that you might be able to build around this to great effect and you know, ultimately unlock new business models. But for starters, you talk about competing standards. So let's talk about the economics of these stablecoins, because if you're right, and the end result is that ultimately the major exchanges that have issued stablecoins, you know, Gemini, Paxos, you and Coinbase are already, you know, hook, line, and sinker with USDC and the Center Initiative. If the end state is that all of these organizations should work together, then the economic system needs to work such that everybody's going to profit the same amount whenever they create a digital dollar and kind of release it in the wild. What has held that up? Because I, as someone that I think is pretty deep in the industry, I don't know the difference between those three different stable coins, right? To me, you just lump them all in one bucket because they more or less have the same general model. So what's the holdup just with the US-based exchanges? And then how do you ultimately increase the member set so that this can include companies like Square and their crypto team, Stripe, or the really big players that will move the needle? Probably not the banks at first, but the other major, you know, fintechs.
Yeah, I mean, I think there's a few things. So the Center Consortium and the membership model is in a place where you're going to start to see other types of membership and other types of firms that are involved with it. And there's a lot of work going on behind the scenes on that, which I won't talk about in detail. I think the vision there is, while the initial use case, or what I call the bootstrap use case for USDC, was crypto capital markets, like that was where people needed it. It was reliable. It had all these other attributes. Like, that's not the end game. It's a step along the way. I think the next phase of this is, moving into payments and settlement more generally. And then over the long run, it's sort of transforming commerce through programmable money and the contracts that enables. But the kind of payments and settlement piece is the next phase. I think, both Libra and the Chinese digital and electronic payment system, DCEP, the digital currency electronic payment system, project in China, have been huge wake-up calls to central banks. They've been huge wake-up calls to large financial technology companies, financial institutions, others. And so there is a lot more attention now on, okay, this is getting real. How do we play? How do we play as a government? How do we play as private sector actors? There's a lot of movement happening around this. And I think you will start to see momentum build around standards. And it will be, to some degree, say, in the US government's national interest for there to be standards around this, as opposed to fragmentation. So anyway, that's a high level view of sort of what we see evolving. I think from my perspective, the expansion and growth of Center isn't so much about how do you add more crypto exchanges. It's about how do you add ecosystem players that are going to ultimately bring this to hundreds of millions or billions of people, or are going to make this an infrastructure that's usable by businesses all over the world. That's as you move to payments and settlement, as you move to that next phase, and there's technology requirements to get there too, sort of blockchain 3.0 as well. But that's the really interesting. I mean, my perspective is that the adoption of stablecoin standards for the crypto exchange ecosystem is interesting. It's important, and I think USDC is doing an excellent job. I mean, even just take, say, DeFi as an example. Within the DeFi ecosystem, which is growing at a nice rate, with fiat-backed stablecoins, USDC has 99% market share. And so, I think it is a standard in many ways from an ecosystem perspective. If you look at developers that are building and integrating with it, application services, others, it's doing quite well. Obviously, in terms of market capitalization for that, kind of fiat-backed, compliant and full reserve model, it's, significantly larger, than other players, almost 100x larger than, say, Gemini Dollar, just as an example. But so I think it's doing well there. But the interesting thing from my perspective is, how do you get this not just in the crypto trading ecosystem? How do you move this into a much, much broader set of use cases?
Well, that gets into my next question, and maybe the answer is none of the above, but you use the card networks as an example of how this member model has worked in the past. If you think about the initial use case of inter-exchange settlement, then there's a lot of parallels with SWIFT. But I think at the end of the day, if crypto is ultimately going to be uber successful and truly rip out the back end of the existing financial system, then you're not talking about SWIFT, you're not talking about the card networks, you're talking about building a new parallel reserve banking system, right? Where, in terms of how money. So I think what's the right framework here?
Yeah, I mean, I think there's a couple things here that are really important. I think, and they're very related, which is the innovation in how consumers access financial products and service is being driven by technology companies. And everyone uses China as an example. It is two of the largest technology companies in the world dominate retail finance, and they are absolutely substitute goods for what you'd think of as banking. And you're seeing, in Europe and the US, not just like neobanks, but, players like Square, players like PayPal, others, and players like Facebook attempting to be in a space. And I think that that's one, which is that digital wallets is, if you want to use that kind of concept, not what we think of as like a crypto wallet, but a digital wallet, a fiat digital wallet. Those are sort of the aggregators of a lot of users. And what you really want is you want interoperability amongst those. You want, I want my PayPal dollar to work with my Venmo dollar, to work with my Square Cash dollar, to work with my Alipay yuan, to work with my Revolut euro. You want that kind of interoperability at the consumer layer. And then that's where I think infrastructure like the center protocols can play a role. And that also relates to the other question, which is sort of what's the reserve bank model, and are you creating like an alternative, Federal Reserve type system? And I definitely do not think so, because I think ultimately digital currency issuers and technology firms that are kind of moving into this space, they ought to have eventually they ought to have direct accounts with the central banks. And the central banks ought to say, if you want to mint digital dollars, you need to be in a consortium that defines the interoperability and other things for that. But you also have to have some supervisory relationship with the government that sort of looks at that. And these sort of technology companies will be in a place to have those kind of relationships. And so this sort of over the mid to long term sort of pits fintechs against traditional banks. Both of them could certainly play in it. But even in, say, England, which is I think a pretty advanced market in a number of areas, they've opened up the central bank clearing system for accounts and ultimately the kind of central bank reserve system. They're opening it up to fintechs. So I think it relates, the reserve model ultimately for stablecoins will actually be central banks, and that that will evolve in the coming years. And there are a lot of proposals in the financial regulatory ecosystem being put forward on ideas like hybrid central bank digital currency. Hybrid central bank digital currency is the idea that you have public-private schemes that are agreed to between central banks and private sector actors, and that there's new forms of charters that are created to hold reserves and accounts at central banks that are backing digital currency issued units. So, I think that's probably where things go.
Let's talk about Circle's role then in Center in particular, because you've obviously gone all in on this as the direction of the company, using the card network historical analogy, where the banks got together and said we need these standards. Ultimately, one of the more, a couple of the more valuable fintech companies in the world, financial companies, period, are Mastercard and Visa, right? So they started as these nonprofit consortiums.
Sure.
But ultimately, there was a company that provided tools and services and kind of maintained these networks. Is that the right way to think about your upside here? Because I think everybody should be rightfully skeptical as soon as they hear, oh, we're participating in this nonprofit, very friendly, ecosystem. That's more believable when people know, like, okay, what's your rank?
Circle itself. So we're interested in, the broad commercial adoption of stablecoins for payments and banking. So we're interested in how this becomes usable for more and more businesses in a lot of different ways. And so what we have talked a little bit about, and we'll be talking a lot more about as we roll some things out, is Circle over the years has built up, behind all of the things that we built, a set of platform services. And those platform services you can think of as like crypto native banking, transaction banking, interfacing between the existing financial system and the crypto system, dealing with infrastructure like blockchains and custody. And we want to make that available to a lot of companies to be able to build on. And so, Circle's go forward, businesses you can think of as a kind of mashup of platform services that people build on top of. And, kind of business banking, but stablecoin native. And that's what we're interested in. And I think for us, right now, there are hundreds of companies that are interested in building using stablecoins in different ways. The creativity around how you can apply and use stablecoins is I think one of the most exciting things that's out there. You can use a lot of different examples for that, and the demand for that, and the demand for platform services, APIs, and underlying kind of commercial banking like infrastructure is really high. So those are the places where we can generate a lot of value. The business model is not like, how do we, get our revenue share on interest income for a currency, which today obviously is declining its interest. And that is certainly part of the Center model and supporting Center itself. But for Circle itself, we want to provide these broader platform services and financial services so that businesses everywhere who are interested in utilizing stablecoins can do that.
We're super helpful. I think it makes a ton of sense. And I'm sure we're going to hear more color about it, maybe even as soon as next week. So we're recording this on a Thursday before Davos. I assume you have some announcements coming out next week, which will be yesterday or the day before as people are listening to this conversation.
Yeah.
It's a little wonky, but is there anything that you can share that's off the record, but will soon be on the record?
Yeah, I mean, so we don't have any major business or product announcements because Davos is not so much a place to do product announcements. People don't really care, but it is a place where, thought leadership is really important. And what I can say is two things. So one is this topic, global stablecoins, digital currency, the future of the international monetary system, that is like a front and center dialogue. I can tell you there are many, many conversations that are gatherings that are, private and public, of the top economic leaders in government, the top leaders of industry, critical leaders in this ecosystem, such as ourselves and others. And the focus is on, how do we move forward models for this, not just on the regulatory side, but, what does this look like for the world economic system? So it is a major topic. The founder of the World Economic Forum, Klaus Schwab, is incredibly passionate about it. Critical stakeholders and board members of the World Economic Forum, like Mark Carney and Christine Lagarde, are also very passionate about this. So this is a major topic, which is great. And I think it's great timing for that. And it's not like Davos is not like a decision-making body, right? Yeah. It's not the G20 and it's not a national government, but it is the ultimate convener of the public sector and the private sector to move agendas forward. And this is a big agenda. And so we're involved in a lot of those conversations, which is great. And we're also going to be contributing to the dialogue with the launch of a white paper on this topic, global stablecoins, digital currency, and the international monetary system. And it outlines our thinking on how ultimately economic policymakers, industry leaders should be thinking about this problem space, and ultimately how we get this to scale and the benefit ultimately touching everyone in the world. So we're trying to contribute to the dialogue.
Well, I will say I've never really cared, to be quite honest, about my own personal attendance at Davos, but this is probably the first year that I have a little bit of FOMO because there is going to be so many fascinating conversations that are happening on the heels of Libra, on the heels of DCEP from China and some of the other chatter from everyone from the Fed to the IMF, and obviously excited for you all to play a part in that. Last question: are you going to reschedule the Buffett lunch for Davos? When are you disappointed that
That's not my lunch?
But you were one of the invited guests, right?
I was, yes.
Well, hopefully you're able to get that invitation extended and it gets rescheduled for your sake anyway.
Happy to chat with Mr. Buffett if that became a possibility.
So, Jeremy, where can people learn a little bit more about USDC and maybe particularly for businesses that are thinking about membership or starting to develop a mindset around what platform services they might be able to leverage? Yeah,
I mean, so two pieces. So on circle.com, obviously there's a great deal of information about USDC. You can learn about USDC. You can sign up for a Circle account and get USDC and use it. And that works with banks from 85 countries in the world. So that's a good place to start. If you're interested in the higher level concepts and sort of where this is going, this white paper is I think, an interesting read. And then Center itself, so Center.io, has an enormous amount of information as well. And if you're, a fintech, or if you're in the crypto ecosystem and you want to have a partnership and involvement with Center, that would be where to go as well.
Well, Jeremy, really appreciate you coming on, and good luck with everything this year, and in particular at Davos.
Thank you.
Thank you for tuning in, everybody. Until next time, be good. Peace.